Hi everyone, my name is David Kosmitter and I am the creator of TimingResearch.com. This is the Crowd Forecast News Show for October 2nd, 2017, where we will be discussing the 210th weekly report, which you should be seeing on your screen right now while I'm talking. And but if you haven't downloaded the PDF yet, you can go to TimingResearch.com and download it there. For everyone watching live, you should be seeing the YouTube page with the live chat section if you want to type in any comments or questions during the show. And I have Hanna back to host today, so I'm going to go ahead and turn it over to him.
Thanks, David. Great to be back. I'm going to warn everybody I have a little bit of a cold I'm getting over, so I have been coughing a little bit. I'm going to try and mute my mic a lot in case I cough. And I'll try and unmute when I talk. We'll see how it all works out. But it's great to be back here. We got a great looking panel here. Barry Rosen of Forecast.
Yeah, Forecast.
Forecast. Okay. Ron Haydt of, is it Finance Hill or Financial?
Hey, Rob, you got it right. It's Ron Haydt from Financial. Perfect. Great to be here.
And we got Larry Gaines from Power Cycle Trading and Steve Lentz from Discover Options at OptionView. And then, again, I'm Rob Hanna from InvestaQuant and Quantifiable Edges. Why don't I go through the list and let you guys introduce yourselves a little better than I can. And just tell us a little bit about yourself, about your trading, about your site if you want. And I'll go down the list just as I wrote it down here and just mentioned it. So Barry, let's start with you. Can you tell us a little bit about yourself?
Okay, I've been involved in futures trading, and I also have an ETF newsletter for about 30 years. Forecast is now on its 30th year operation. I'm a market timer, and I combine that with Elliott wave theory. So I use the timing to kind of filter out the Elliott waves. The Elliott waves usually kind of keep me on track of where the market's going, and the timing kind of shows me hidden things that aren't normally available. I throw a little GAN in there also. We've been publishing, again for 30 years, and we're very we're very precise. We try to, make our numbers and timing very specific. My website, Forecast.com, and CommodityTimers.com, where we offer trials, and I have other information.
All right, great. Thanks, Barry. Ron, let's go to you. Can you tell us a little bit about yourself, your trading, and Financial?
Yeah, hey Rob, I would love to. You guys should be able to see my screen. My name is Ron Haydt. I am from Financial.com, and I started in the stock market back in 2000. Pretty much did everything wrong possible, and we went through learning. You learn a lot about trading, and while we love doing education and helping folks become better traders as well, we wanted to build something that actually saved folks a lot of time, and that's just where Financial comes in. So we think it's great for stock and option traders, and in short, what it simply does is just puts high probability trade ideas on a silver platter every single day. And one of the hallmarks is the seasonality aspect, so you can actually select periods of time and see which stocks perform well during those times. So it's just a lot of fun. I love teaching, which is why I keep doing it. Folks say, well, if you trade, why are you still doing all this stuff? Because I love it. And I think everybody listening today is going to have the same answer. We all love what we do, and we try to help folks, improve their results. So thank you, Rob, and thank you to David for having me here.
All right, great. Thanks, Ron. Larry, how about you? Tell us a little about yourself, please, and then Power Cycle Trading.
Yeah, so been actively in the markets for over 30 years, and for over 10 years ran one of the large oil trading group, the international trading desk for that. So a lot of extensive background trading in all the various different markets. Been in using options since the mid 80s. Started trading options on oil, and so have a trading educational site called PowerCycleTrading.com. So we use directional trading models that I've developed, and then use the directional trades use options to trade various options strategies for trading the various different directional setups. So that's kind of my background in power cycle trading, what we do there.
All right, great. Look forward to learning more as we go along too. Steve.
Yes.
Steve Lentz at Discover Options at OptionView. Give us a little bit about you and your site there, please.
Absolutely. I'm Steve Lentz. I'm with Discover Options. We are the subsidiary of OptionView. That's with the VUE. OptionView International has been in business since 1983, primarily involved in the high-end options analytics world. At Discover Options, we teach folks how to trade in strategies which are non-directional in nature. And what sets us apart is that we also really could focus in on those market conditions which lend themselves to implementing campaigns that are non-directional in nature and using statistical studies. And I'll touch on that a little bit later when we get into the S&Ps.
All right, great. Thanks, Steve. And for those of you that don't know me, excuse me, I've been trading since the late 90s, early 2000s. I started writing for TimingResearch.com. I began trading full-time in late 2001, early 2002. I've managed money over that time, and I started the Quantifiable Edges website in 2008. In 2012, I started another site called Overnight Edges. And that eventually merged with Scott Andrews' Master the Gap site and became InvestaQuant. At InvestaQuant, we offer everything from intraday to overnight to swing type trades, trade ideas, and research and systems now as well that can be automatically executed through brokers. Quantifiable Edges remains primarily a swing to intermediate term trading site. And you can find my research and ideas at both places. So let's get into what's going to happen this week a little bit. Before we get into any real discussion, what I'd like to do is just kind of get your thoughts on bullish, bearish, and how confident you are. So quick 3 or 4 word answers is good, and then I'll come back and let everybody say as much as they want. I'll be happy to go first. I'm leaning bullish this week. I have a low confidence level on that though. Let's go up, and I'll just mark down who's bullish, who's bearish, and that'd be great. So, Steve, how about you? Are you thinking bullish or bearish?
Bullish, very low confidence.
Okay. Larry, how about you?
Yeah, bullish, 65%.
Okay. Ron? Ron, I think you're muted if you're talking. Are you looking bullish or bearish? And
yeah, hey Rob, I'm so sorry. Yes, I was on mute. I am bullish, but I'm with you guys. Low confidence. Thank you.
Okay. Well, Barry, we're going to assign you the bearish side then.
No, I'm bullish about 65%. I usually find the week of employment is kind of congestively topping. So.
Okay. All right. Well, let's talk about some of the things we're seeing that's unfortunately making us all kind of weakly bullish to moderately confident in being bullish. I'm if I had to put a number to it, I'd say about 55%. But Barry, I'll start with you. We'll go top down, so I just went bottom up. What are the things that are making you think we're likely to move higher this week? And what else do you have in there that you're worried about, I guess?
Yeah, well, I kind of use Elliott Wave as a map, and I filter it through cycles. So last week I was looking for 25.22, which came in this morning, and so I've got a kind of a pause in the action. And this morning I had 25.25 to 25.27, and so the patterns don't look complete to me, so I would have liked to see another push up to 25.47 to 25.45, and this week, and that would kind of complete the patterns a bit better.
Those futures prices, cash prices?
Yeah, S&P futures prices.
Okay.
And I'm I'm a cycle timer. I was rated #1 for gold last year, and I was #5 for the S&P last year on Timer Digest. And my cycle started switching next week, and I've been kind of bearish in the month of October. So I'm kind of looking for a 5 or 10% correction. And we kind of have an environment where you can see it's ripe. And the patterns kind of keep me out of trouble. And the weekly chart pattern has been projecting 25-20 for a long time, which came in today. And so, now I published that last year. So, it is kind of a dicey area here, but I still think we could go higher this week.
Okay. All right. So it looks like a little higher, but then we're due for a bit of a pullback after that, it sounds.
Right. Yeah.
Okay. All right. Ron, what's making you bullish going into the week here?
Yeah, thanks, Rob. The charts, I'll use daily charts and weekly charts, simple candlestick analysis for me, and remain above all the moving averages, and even the Russell 2000 is starting to lead the way. It's overbought on a weekly basis, but it's still lower left, upper right. So the charts are bullish, but I said I had a pretty low confidence in that. And from a historical perspective, and I'm actually just showing the data on financial that, if we look out, not just this week, but even over the next 3 weeks, as Barry just mentioned, the S&P really doesn't go anywhere. In fact, it actually has a slight edge of falling. So if there's going to be an opportunity for a correction, whatever the percent might be, I think that stands now. We have earnings season kicking in next week with Alcoa. This week's sort of quiet on the earnings front, but if there's an opportunity, it's now, and then the seasonality picks up again towards the end of the month. So if there's a window, I think it's now. Okay.
When you say seasonality picks up towards the end of the month, you mean bullish seasonality at the end of the month?
Yeah, thank you. Yes, bullish seasonality. Last week of October, first week of November, then it swings, because right now, even over the next couple weeks, the S&P falls by about 1% or so on average. But it's not a big move. It's sort of just lollygags around. And without that bullish tailwind, I think with Barry that we're just setting up for an opportunity now with earnings that we can have that pullback.
Okay, interesting. Yeah, I've done some analysis on weekly seasonality during the year too, and I've seen a lot of the same things where you got the first week in October can be dicey. Even the third week in October I've seen can be dicey. And you get into the fourth, and if there is a fifth, the fifth week, like the end of the month, now you're getting into some better seasonality. A lot of times, October's known as a reversal month too, because it's had the big crashes and it's had the big bounce backs, right? That's where the bottoms have occurred. So, so those big moves, I think, play a lot into that kind of seasonality. The seasonality numbers that we see sometimes.
Yeah, totally agree.
Yeah. All right, good, interesting. So we got Elliott wave pointing a little bit higher, and seasonality's pretty good right now. Larry, what's making you lean to the bullish side as well here?
Kind of the same things. Basically, when you look at the technicals, the charts look really great. I mean, the trend is still strong to the upside. It's been hard to pull it back on any kind of news. Seasonally, we made it through September, which tends to be one of the weaker time frames of the year. So we made it through that with a positive outcome, and that usually, statistically has tended to make October calm as well. But like Ron was saying, that seasonally also there's a tendency for the first week or 2 weeks in October to potentially have another pullback, and then a strong end of October is usually the seasonal trend. So again, if we're going to have any kind of weakness, it would be probably the first 2 weeks in October. But based on what we've seen so far this year, not sure how much of a pullback we'll get. Another interesting research I was looking at the other day, it was showing the S&P 500 after 8 out of 9 positive months through September, the markets tend to respond really strong 1 week later, 2 weeks later, just throughout the rest up through 6 months. And this was a research study going back to 1930. So this kind of market hasn't happened very often, and so a lot of anomalies to it. So it's I was looking for September to have a pretty a decent little fade, and we didn't have it. So things look good, but again, you need to be cautious, because on the other side of the coin is that other research studies are showing, like for example, the National Association of Active Investment Managers is showing an all-time historic high since they've been doing a survey over the last 10 years, which isn't that long of a data set, but it's showing extreme exposure of 96 percentile, exposed to the market, and confidence level of like 99%. So, when you have that, anything can happen. So just kind of temper your enthusiasm.
Yeah. You bring up some good points. Everything's trending up, right? And that's pretty obvious. Today, actually, we had the S&P, the NASDAQ, the Russell, and the Dow all making all-time highs. So tough to argue with the trend is up. And your volatility in September is that's an interesting point as well. I saw a study a few days ago that noted that it was measured by the daily range on a percent basis. This September had the smallest average daily range of any September. That was measured back to 1970. So,
yeah. So statistics are just crazy.
Yeah. So, part of that makes me think this tight volatility. It's kind of like when you're riding a trend. You expect it to continue until it doesn't, and then you got to adjust. But the scary part is, are we wound so tight that a volatility explosion could really catch people by surprise and really cause some havoc in the market? So, it's I think we're entering a tricky area here. Steve.
Okay.
To you, you mentioned you were leaning bullish as well, and you have anything you want to add or reinforce that the other guys have said?
I'd like to. Let me share. Are you seeing my screen here?
Yes.
Are you seeing my chart there? Okay, good.
Yes.
Then let me hit F5. Perfect. So what I like to do is, I'm bullish only because the trend is up. But I have very low confidence, as I mentioned before, and it's because of the statistical studies that I do every week at week's end, and then do it on our YouTube channel. But I define, and what I do is I look at the current market condition, and then I go back and look at I look at past occurrences of the same condition and just see where price went. And we have to use price distribution bands to do that. But I define our current condition as, Thursday was an inside bar, and then Friday was an upswing bar, higher high, higher low. The trend is above the 50-day simple moving average, and the 15-3 stochastic was in the, very high, between 60 and 100. So this condition with these three elements combined has occurred roughly 72 times in the past since Jan of 2000. It hasn't occurred that often, but when it has, it's interesting to see what price has actually done after this. So just a real quick look at price distribution bands. We take bands located a standard deviation away 5, 10, and 15 days out. And then we just see how often those bands get struck for each close. And so what you'll see here is that I'm just reporting on the bands that got struck. Look at the very top bar. It says historical distribution. The upper 5-day band was struck 21.3% of the time. Now on our current condition from Friday's bar, and then we see clearly today it exceeded Friday's high. That occurred 42 times in the past, and of those 42 times, the upper 5-day band was struck basically 4 times out of 42. So the market continued up at a standard deviation only 4 times out of 42. It reversed course and went down a full standard deviation over 5 days, roughly 4 times out of 42. That's the 9.5%. So hence my apprehension about being confident one way or the other. You just see all the bands are getting struck less often. It's an indication of lower than usual market volatility in either direction. So that's this is what we look at when we look at selling option premium. We want to go into environments where the market is more likely to be less volatile than normal instead of exploding in both directions, which can certainly happen in certain market environments. So that's kind of where I'm at here. So
it seems like what you're, a possible explanation is that we're in a strong trend. There's no indication yet that trend is likely to reverse. So there's a decent chance we go higher, but we are so overbought at this point that you're not going to get some type of explosion from these levels. It's not like we've been wound tight and we're breaking out of something here.
Well, historically, that's exactly what you see.
Yeah.
Exactly.
Okay. All right. Interesting. Thanks for sharing that with us, Steve.
Yep.
And unfortunately, I'm like the others here, so I'll do my best to try and get people to argue in the next half hour or so. But we all seem to be in agreement, but for many different reasons that there's a decent chance the market's going to move higher at this point in time. One of the things I looked at over the weekend was other times where the SPY, the ETF for the S&P 500, closed at the high of the month on the last day of the month. And I initially did it just out of curiosity because the first trading day of the month has often been bullish. So I wanted to see if that held true when we were closing at a high of the next month. And it has to some degree, but what was most interesting to me is that over the next 5 days, we've seen it close higher 72% of the time. So it was there was 21 up, 7 down, 1 break even basically, and the winners were about twice as large as the losers. The average instance, the S&P gained about 1.1%. So the strong momentum going into the end of the month has typically continued going into the next month. And so that's one of the things that I'm seeing that I find favorable, in addition to all the stuff that everybody else already mentioned. I'll tell you one of the things that I'm a little concerned about right now, and then I'll run back quick and see if anybody else has other concerns that you want to express, is that we've entered this new period here where the Fed is going to be reducing the size of their system open market account. So they're not going to be providing liquidity in the way they had in the past, and that historically since 2003 has been something that the market has struggled when this has happened. So we're going to see less liquidity provided by the Fed, and that could end up hurting the stock market over time. And it's not a huge reduction that they're starting with over time. If you look at it on a chart, and I've done some charting of it, it's pretty gradual. So it's not going to be a big shock to the system, but it's a change, and the market needs to adjust to changes. So I'm not looking at it as a positive change, and we'll see if the market adjusts right away or if it's something that leads to a correction further down the road. And that's the. Other than that, there isn't a whole lot of bearish things on the horizon. Other than as Ron mentioned, we have some potentially bearish seasonality in the middle of the month. Steve, is there any things that's really concerning you about the market right now?
I just on your comments there, I think that's a valid concern. But as soon as as fast as the Fed can make that decision, they could reverse and go the other way too. So, it'd be an interesting study to see past announcements when they've come out with that policy and just go back and take a look. I'd be curious to do that. But no, I think, but there's a good case to be made for the overbought nature. From a technical perspective, I think that's always glaring. When you have to be leery of that from a technical perspective. It's been going up and up and up. And looking at reversals, we'll have to be quick to pull the trigger when you see a glaring reversal signal.
Yeah, certainly. Larry, anything you want to?
Well, I think, we saw a big support to the market last week on all the tax talk, all the tax structural changes potentially. They keep dangling that over the market. It's kind of like a put to the market. It's like that. The Fed used to be the put. So as long as they keep it, nothing's been done yet. Hopefully something will get done. But as long as it's not done, and they keep maybe coming out every week or 2 weeks or whatever, and they start talking about it, it tends to support the market. So, you've got that, the other side of the coin versus, reducing the balance sheet from the Fed. So that's kind of holding the market up too, I think.
Yeah, the tax thing's kind of like the old rabbit at the Greyhound track, I think, right? Market
Yeah.
Ron, what about you? Anything you're really concerned with right now?
No. Personally, I think there's a lot of potential pitfalls out there, but the market is just so resilient. It truly is astonishing. And how it can just shake everything off. For me, I'm still really, really long-term bullish. Like we had talked about, if we can get through maybe this little hiccup here in October, assuming there's even going to be a hiccup, barring something massive happening, you can make a great argument that the market is not rising based on true fundamentals, depending who you talk to. Other people can argue that it is, but I think the one thing that sort of just keeps seeping in the market is, whether you're international or here maybe in the US, where do you put your money to earn a return? And it just keeps finding its way into the stock market, because if you keep your money in a bank account, you're not going to earn any interest. In reality, we could argue that there's already negative interest rates here, with all the banks updating their policies, and it's $25 for this and, $30 for this. And, I saw a local bank here now charges you to even do a coin thing where you dump your money in. I mean, you start adding up all these fees, unless you have $10 million in the bank, your interest is negative in reality. So the money finds the dividend stocks. I think it sets us up for a massive problem down the road, way bigger than what we're looking at now. But that's my 2 cents.
Yeah, you bring up an interesting point there about there's not a whole lot of places to go to earn a great return other than the market, right? In people's eyes. And another thing I wasn't that I read it a couple months ago, but it was noting that supply of stock is down substantially over the last 20 years or so. There used to be 7,000 stocks that were listed on the New York Stock Exchange and NASDAQ, and now we're around half that. So, part of that's due to merging, part of that's due to companies going out of business, but whatever it is, we're not seeing an expansion in supply. So there's less and less stocks to buy into, and it has also made things more and more correlated, I think. So yeah, we'll see what happens when the plug gets pulled. But right now, you're right. Things keep pushing into the same areas, and the indexes are all benefiting. Barry, any big concerns from you?
I've been watching NASDAQ. NASDAQ's been leading the way up, and it's been really kind of struggling lately. And every time we get up to 6,000, on the futures, they're selling it again, and they're doing that again today. And the FANGs are struggling, and tech has been leading the way up, and it's struggling now. So I think when tech starts collapsing again, it'll be a problem. I do think we're going to hold up another week or so. But I am watching NASDAQ. NASDAQ has a small chance of getting up to 6150 on the futures if it can explode here, but they keep selling it up here, and that's kind of a big concern to watch. I'm also I've also noticed the week of the employment report. Sometimes we'll make a high on Monday, and then we'll kind of congest in a range for a few days, and then people wait for the employment report, and then if it goes well, they kind of explode it to these new highs. So that's kind of what I think is going to happen. I don't think we're going to get a lot of new information the next couple of days, but I am kind of concerned that weaker cycles start kicking in, the market, we have too many kind of things hanging out there. One of the things that is just going to keep this market going. I've got a high until 2018, or about 2657 on the S&P. Is I hate to be kind of conspiratorial, but I mean the plunge protection team, they print cheap money, the funds buy stocks, and everybody is happy. I mean, no one's going to complain for the stock market going up. And it's the one thing that kind of keeps people from rioting in the streets, because the real economy is not working. So I mean, people, so it's kind of it's been put in place for a number of years, and it's still working, and I'm not quite sure what's going to kind of like unglue it next year. I mean, there are a lot of things setting up, but it's quite amazing.
All right, thanks, Barry. Before I move on, I will note, and I probably should have noted earlier, that this week we had 66% of participants in the in the survey point to a guessing higher rather than lower. And in the past, David noted this has happened 38 times in the previous 209 weeks, and the majority sentiment was correct 61% of the time. So seems like we're on track with everyone else at this point, thinking things are likely to float up a little bit this week, and that there's a decent chance of that happening. Let's move on and talk about David's question of the week here, which is, what advice would you give and/or what resources would you recommend to someone who is new to trading? Guys,
in the live chat, someone asked what trading software you're using. So if you want to go ahead and answer that as well while you're talking about this, kind of goes together. So.
Okay, great, good idea. So I'll go from the top down again here. Barry, what advice would you give to someone, and what resources do you recommend? And I expect you all to answer your own websites at least.
Software-wise, getting to David's question, I've been using Advanced Get for about 20 years now, since 1994, and it has gotten a lot of awards over the years, and it's been very helpful for me. I think eSignal is marketing it now these days. For somebody who's new in the market, I think the biggest thing is really kind of money management, and not getting caught up with what everybody else is saying, because this market has just been very easy to trade, and that's why people who are new to trading, you just throw your money in and it makes money. At some point when they start shaking people out, let's say this month or next year, you just have to kind of be on top of it. The money management is the key for everything, and so just make sure you're not risking too much of your account in any one trade, and you don't get caught up when CNBC is just talking about it going to the moon, that you get all caught up and you're buying near the top and stuff like that. And this is kind of a week where if the market does make a new high to 25.7 or 25.50, somewhere in there, that suddenly people say, oh, the TV will be kind of raving about what's going on. You have to kind of just be cautious about that and manage your money carefully.
Yeah, all good points there. Good advice. CNBC is one that is interesting. I mean, I think I don't watch CNBC anymore, but I did for years and years, and I don't think it ever helped me in any trades. I can't recall that ever happening. So I wouldn't look to that to generate trade ideas. But yeah, money management hugely important, like you mentioned. Thanks, Barry. Ron, what things? I guess what software do you use, and what advice would you give, and resources you recommend to someone new in trading?
Yeah, thanks, Rob. And I agree with your sentiments exactly. For the software that I use and what we've built, it's called Financial.com. So it's very easily spelled. It's just FINAN and then chill, CHILL. And that'll allow us to search for trade ideas based on seasonality and a whole lot of other things too. But to your question, Rob, the one thing when I first started trading, I was always hands-on, and I ended up taking real money and quickly turning that into zero. And I got really good at it. It's just not something you want to be good at. And I think we'd all agree, you don't do that. But it's like, but you did it anyway. And not only once, I did it twice, and I almost did it so well I got it a third time.
Oh,
and yeah, I know, right? My mom said you're always so stubborn. And but use a paper trading account. I really do love teaching, and we go to the Vegas expos or the money shows or wherever they might be, and you just run into folks that are trading and you're chit-chatting, and so many say, hey, I learn best if I use real money. And I'm like, geez, we're not the Fed, we're not the government, we just can't go get more money. It's a finite number. So find something you enjoy, whether it's futures or stocks or options, and then just practice it just for a little bit before you go and use real money. I'm not a licensed financial advisor, so I can't tell anybody what to do, but from an educational perspective, please paper trade that stuff and find out, are you as good as you think? Or you're not as good as you think you are. And, use stops, pick a number. And probably the second biggest thing is once you decide, hey, this looks like a good trade idea, you pick the stop or the exit or the adjustment, whatever it is, before you get in. Because once you get in, I'm from Pennsylvania, so the saying that we like to use is you become a deer in the headlights really quick. And that is not good, because you end up getting run over, and then a loss turns into a really bad one. And I've been there and done that, too. So those are my two biggest points.
All right, great. Yeah, good stuff, Ron. And look out for those deer driving down those Pennsylvania roads. I'm from New Jersey, and we had the same problem there. And now I'm up in Massachusetts. And there's a lot more deer in Massachusetts now than there were when I moved here. But, yep. Don't want one of those things coming through your windshield. Be like a scene out of Tommy Boy. All right, Larry, let's go to you. Same question. What advice would you give, and what resources do you recommend, including software that you use?
Yeah, thanks. So basically, in my opinion, trading starts out with direction. So if you don't have a clue as to direction, it's going to be difficult to formulate a trade and a plan for that trade and a strategy. So I think you need to, I use what I call a 7-step process for trading. And the first step starts with direction. So whatever your directional tools are, use directional tools. So this is my trading model that I've developed actually, that's based on price momentum, looking for breakout type trade setups. So it all revolves around cycles. Markets don't go straight up or straight down. So I've always been obsessed with trying to find cycles. Where is a cycle turning point? And then, looking for a breakout or reversal within a cycle. So based on the trading model that I've developed, that's what we look for. And then the next step is to always have in place, before you actually put the trade on, those things that everybody's been talking about. Have your, what's your trade management plan? What's your profit stop? Where are your profit targets? Always have a target laid out. Always have your stop points laid out, or your defense points laid out. So it's a total process. And I also then highly recommend, like Ron was saying, always paper trade when you're trading anything new, any new market, any new strategy. Start out with paper, kind of what I call it the rhythm, get into the rhythm of the type of trade you're looking at. And then once you're comfortable, confidence, I always say, is if you have confidence, then that's going to spell profits. So it's kind of a process. But the first process is you really do need to have an idea of direction.
All right. Yes. I agree with that completely. You don't want to be battling the trend. You don't want to be fighting where it's going to go. You don't want, it doesn't matter. Doesn't matter what time frame you're trading in. It's nice to have the next larger time frame on your side, right? So if you got the trend behind you, that would seem to help. Steve, let's go to you.
Okay, real good. Thank you. Choosing determining the future direction of the market can be, it's extremely difficult. You can just look at the statistics on the studies, done. You can see in the PDF, it's roughly 48-50%, success. It's very difficult. And so there are option strategies where you can make money no matter which way the market goes. You do have to, though, speculate on volatility, which is a different game. And so that's what OptionView does. That's the software. It helps you analyze and come up with very sophisticated options strategies that help you make money.
Steve, I thought volatility was just a thing of the past.
It is, of course. It's gone and never will be with us again. Right. So I use OptionView for those strategies, and for the stock, looking at charts and doing studies, I prefer Metastock. I've been with both programs better part of 20 years now. And I cannot agree more with the concept of first having a plan, coming up with a plan that you can then paper trade with no money on the line. And here's where we really help folks, and I've done this myself so much. It's in that's the next one is scrimmage with a small amount of money in the markets, using your back-tested paper trade plan. There's that step going from confidence from paper trading to then getting into the markets. And so often, and I've done this myself, I get too big too quick coming off of a successful paper trading venture. And so I kind of liken it to, and I coach football. I'm doing high school football now. And football is a physical contact sport, and trading is an emotionally high contact sport. And you have to acclimate yourself to the emotions of the market with your money on the line. And to be honest, it's easier, and I've done this when I ran a CTA, it's easier to trade other people's money because you're just being paid to trade the plan. And you can emotionally remove yourself. But you know what? When it's your own money, now it gets kind of dicey. And so that really requires then the notion of like in football, you do drills first in the practice field, and then you're not ready for Monday Night Football till you first have a scrimmage or two with another team. Likewise, in the markets, you have to kind of dip your toe in the water, trade small, make those mistakes with your broker's platform, which everyone does and doesn't want to admit. You click the wrong button and oops, and you got to go reverse the trade out, etc. You got to get used to your broker's platform. Do that with a small amount of money each trade. So small that it's uncomfortably small. Get used to that first, and then wade your way into the water and get into that emotional contact, which it can be for some people.
Yeah, I agree with that too. You need to trade with amounts that are small enough that you're able to manage the trade in an optimal way, and it doesn't become a huge emotional roller coaster for you. Otherwise, you just won't last.
No, not at all. It can be quite harrowing for some people. At the end of the day, you have to be kind of like you have to be a cool cat. You got to be an assassin almost. You have to be calm, cool, and collected like a PGA golfer. Those guys don't show emotion. They just have a quick memory loss from the bad shot, and they move on. That's what you got to have.
Yep. All right, so I'll put in my 2 cents on here as well. A couple things. One, I would say you got to make sure you got an edge on your trades, right? And so don't just take any system or trade idea out there that you hear from any random person and think that's gonna work. And even things you read in books. The market's constantly changing, and I can share a bunch of books with you that have obsolete strategies in it right now. So trade something that has an edge in the current market. Another thing for beginners, and this is something I did that helped me greatly, is track the reason for every one of your trades. So I would have certain setups that I would trade, and I still do, but I would track which setup got me into every single trade. And there were times early in my career where it was just kind of a hunch. And what I would have to do if I was playing a hunch is write down hunch because it didn't qualify for any of my setups. Well, you track that for a little while. It didn't take me long to figure out that those are my worst trades. And I will bet it is for many people. Although if it turns out to be your best ones, maybe you should be trading hunches. But track your reasons for getting into a trade and the profit and loss on those trades, and then you can figure out what's working and what's not. You know, and it can be certain things that are working for you, and certain strategies just won't. Even if they have an edge, you might not be able to execute in that time frame. Right? If it's a day trading strategy and you can't look at the market all day, then you're going to have trouble executing it. If it's a swing trading strategy and you can't look at it if you can't look at the market at least once a day, you'll have trouble executing. If it's a long-term strategy and you get antsy once you get into a trade, then you're going to have trouble executing. So those are things you got to think about as you're entering trades. From a software standpoint, I've learned an awful lot from back testing over the years, just market tendencies, and you can try out different ideas for trading as well. I use TradeStation, and I have for a long time, and so I think it's a good platform for back testing and execution as well. So that's something that I do use. And also, obviously, I'd recommend everybody check out the tools at Quantifiable Edges and InvestaQuant. And all these guys that we're talking to today seem pretty smart, so maybe you should check out their tools as well at Power Cycle Trading and Financial and Forecast and Discover Options at OptionView. Let's go through one last round here, and I'd like you to if you have a trade idea for the week, that'd be great. If not, you can tell us anything that you got going on at your site right now. If you have any special offers or things coming up, or anything you want us to be aware of, then that'd be great. So let's go bottom up this time, I guess. Steve, we can start with you.
Sure. One thing I do every weekend, and it's available Sunday nights, is on our YouTube channel, our Discover Options YouTube channel, is I do a study for putting, on the SPX, putting on a condor or a butterfly. That's a non-directional type strategy. Just answering the question, is now a good time to do that based upon the current market condition? And so what came out last night was that, yes, Friday's environment was, Friday's close was an environment conducive to putting on, a 30-day condor. We're expecting to be in the trade 30 days for a condor, or even a bull put spread in the SPX, where you're selling put premium, a standard deviation out 30 days away. So those came up as positive, and we do that every Sunday night, and you can get that on our Discover Options YouTube channel there.
All right, great. Sounds like something people should go and check out on Sunday nights. Larry, how about you? Any trade ideas for the week, or anything you want to update us on about?
Yeah, here's one that looks kind of interesting. This one we were looking at in our virtual trading room this morning. This is Western Digital, and let me put the chart up. But this is what we call it. It looks like it's starting to have what we call a volatility breakdown squeeze. So if today, coming into the close, we start looking like it's going to close below this is a 200-day moving average. So below this kind of 83, I think there's good potential downside. So you could put up a pretty defined risk put debit spread for downside move, either to first target would be here to 81 and then back down to that prior low. So Western Digital, and another one that we had set up on Friday, still looks pretty good, I think, is IBB. So if we look at IBB, this would be to the long side. And I like to, in this market, have a little bit of a long and short exposure. So this one is potentially looking to break out to the upside. So this is IBB. So those two look pretty interesting. So you might want to take a look if you're interested in some different ideas. Those would be two to look at. IBB potentially long, Western WDC potentially short.
All right, great, Larry. Thanks. Ron, how about you? Anything you want to share with us, some trade ideas or things going on over at Financial?
Yeah, thanks, Rob. What I'm going to do is offer everybody a free trial. And what's going to happen here is when you opt in for the trial, I'm going to host a class later this week. And we're going to look for the hottest trading ideas going into year end, because once that November 1st, plus or minus a week, arrives, which is not far off, the market gets really seasonally strong to the bullish side. So building that shopping list, and if we get that market pullback, that would be so nice. That'd be awesome to ride, try and ride some of those high flyers up. One of the stocks that I like to watch, you should see this on your screen now, is Disney. I mean, the Mouse House is an absolute rock star. I mean, even accounting for the next couple weeks of just flopping around, or maybe just being a little goofy, pun intended, this thing still goes, I know I have really bad jokes, 77. Rob, I can see you laughing.
Yeah, I was muted. I was laughing.
It still goes up 77% of the time on average by 15%. And I won't get granular, but for our members, we do these special members only events. And if you're in a trial, you qualify, we'll do the webinar and we'll just list out the hottest stocks for the week ahead. And these are incredible moves. And if you start thinking about maybe a long call option or something like that, the returns are really, really crazy. And what we're going to start with is we're just going to go screen, we're going to go seasonality. And then over the next 12 weeks, these are the hottest stocks for those next 12 weeks. So in like 2 or 3 clicks, you can get exactly what you need to see. So here's what I'd like you to do. And David's going to send this out. It's really easy. If you just go to Financial, which is our name, just go financial.com / and the word timing for Timing Research, which is today's event. You're going to be taken to this page, and all you're going to do is put in first name, last name, and you're going to get a free trial. There's no credit card. You never build the thing. You never have to cancel. Nothing. And then we'll do an event when we have more time later this week. We'll spend an hour. We'll do data mining, and just build a nice little potential shopping list. So it's a lot of fun and it's super easy to do. So that's my 2 cents. Thanks, Rob.
Oh, thanks, Sarah. I was trying to unmute myself. But yeah, that all looks great. I'd recommend, or I'd encourage people to check that out. Why not check out a free trial, right? And sounds like November 1st is a key date. David, maybe mark that down to have Ron back first week of next month. And Barry, how about you? What's going on at FortuneCast?
Well, we're kind of winding up a lot of trades. Like we were short gold and silver from last week on the ETF timer with ZSL and GLL, and we time to bank profits this week. When those markets shoot up again, the stock market comes off next month, and gold and silver, have a poor rebound, maybe 1320 on gold, and we'll be wanting to get back in those short plays on the metals. Seasonally, metals tend to be down into December, and it's just, if they top out in the middle of October, usually, it's one of those seasonals that works really well. So that's one of the things we're looking at, but the timing isn't quite right this week. We obviously are looking at shorts in the stock market next week when we get our setups for pattern completion. We just completed our monthly newsletter, FortuneCast Financial Visions of the Future, and we look out at this next month real intensely, and over the next 3 months, the next 6 months, the next 18 months. And for people who like long-term overviews, that's available at commoditytimers.com, and we have a special $200 off this week. It's $395 for a year. We will be offering some trials of our service also, but that's kind of what we got going on at the moment.
All right, great. Thanks, Barry. Everybody go ahead and check out FortuneCast as well. I'll go last here, I guess. I don't have a trade idea for right now. I exited quite a bit last week, and I'm kind of sitting on my hands as we're now overbought with the strong trend at our back. So most of what I do is swing trading. So I'm either going to wait for a pullback or I'm going to wait for better evidence that overbought is going to reliably lead to a pullback before I get involved. But for the most part, I'll trade with the if not the trend, then at least my intermediate term bias on my side. And my bias right now is long, so I'm looking more for long trades. And I'll be looking at them harder when we get a pullback. I will be doing a webinar next week at InvestiQuant. I'll be discussing our Swing Edges product there and our Navigator product. The Navigator is a newsletter that I've written for about 2 years now, and it's done really good job of anticipating market swings over that period of time. I'd encourage you to go to InvestiQuant.com. I think it's just /Navigator, and you can learn more about it and the history of it. But I'll be doing a webinar next week, and everyone will get an invite to that. You can take free trials of that. I think we got a free 7-day trial. Just sign up anytime. And like Ron's trials, there's no credit card needed or anything. Just name and email. And same thing at Quantifiable Edges. If you're looking to trade individual stocks as well as the indices, primarily for swing term, then Quantifiable Edges has a lot of tools and trade ideas there as well. So you can get free trials at QE as well. And I hope everyone does take advantage of several of these offers that are out there today. I think we've had we've got a real smart group of people here, and hopefully everyone listening benefits a little bit. Thanks everyone for being here. David, thank you for having me and for putting together such an interesting group.
Could I, before we sign off, I'm having a webinar actually tomorrow night, Tuesday. So and it's on directional trading. So if you'd like to sign up, just go to my website here, powercycletrading.com. And if you look here, you'll see click here for Larry's upcoming webinars. Just click on that. And then you'll see the title. It's 5 winning high probability chart patterns and how to trade them. So if you're interested in something like that, just put your name, email address, and join us tomorrow night at 7 Eastern. So nice, free, good webinar on directional trading if you'd have an interest in that. So thank you. Thanks, David. Thanks, everybody.
All right. Thanks, guys. Yeah, great show. Just a reminder for everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us tomorrow, October 3rd at 9 p.m. Eastern Time for the 6th episode of the new Analyze Your Trade show. We'll be having Oliver Schmalholz from News Quantified. He's going to be a first-time guest. Also, Neil Batho, Jim Kenny, and Dean Jenkins will be back. And just want to thank all my guests for today. Barry Rosen of FortuneCast.com, Ron Haydt of Financial.com, Larry Gaines of PowerCycleTrading.com, Steve Lentz of OptionView and DiscoverOptions.com, Rob Hanna of InvestiQuant. Thanks, everyone.
Thanks again, David.
Thanks, David.
Yeah, thanks so much, everyone. Have a great day.
Bye-bye.